Good afternoon and welcome to Ignitis Group's earnings call for the first 9 months of 2025. Today, we will provide an overview of our operational and financial performance for the reporting period. Following the presentation, we will open the floor for a question and answer session. Before we begin, please note that today's presentation contains forward-looking statements. These statements reflect current assumptions and expectations of our management team and are subject to risks and uncertainties. Actual results may differ materially from those expressed or implied. I will now hand over to the management team to start the presentation.
Good afternoon, everyone, and thank you for joining us today. In the first 9 months of 2025, we delivered strong financial and operational results with key highlights as follows. First, our adjusted EBITDA reached 405.1 million euros, representing a 2% year-over-year increase. Second, our installed capacity increased by 0.7 GW to 2.1 GW, reflecting our focus on driving strategic growth. Third, we maintained a robust balance sheet with the net debt to adjusted EBITDA ratio standing at 3.33 times. Our strong financial position also confirmed by S&P Global Ratings, which reaffirmed our BBB+ credit rating with a stable outlook. Lastly, in line with our dividend policy for the first half of this year, we paid a dividend of 68.3 per share, corresponding to 49.4 million euros. We will now take a closer look at the progress made in each business segment. First, the progress of our largest business segment, green capacities portfolio development. We increased our installed capacity by 0.7 GW to 2.1 GW. This growth is attributed to 6 projects reaching commercial operation dates. By technology, we added 450.5 MW of onshore wind and 263 MW of solar. By country, 313.7 MW of the new capacity was installed in Lithuania, 239 MW in Latvia, and 160.8 MW in Poland. Completed projects include Kelmė Wind Farm, the largest onshore wind farm in Baltics, the second Silesia Wind Farm, one of the largest onshore wind farms in Poland, and the largest solar farm cluster in Latvia, comprising Varme, the first and second Stelpe solar farms. We also increased our secured capacity by 0.3 GW to 3.4 GW, following 3 final investment decisions made for battery energy storage system projects in Lithuania, with total capacity of 291 MW. It includes projects in Kelmė, Kruonis, and Mažeikiai. With a combined investment of around 130 million euros, these projects are expected to reach COD in 2027. Further on, in Q3 of 2025, we secured a 318 million euros long-term financing for the 314 MW Kelmė Wind Farm from European Investment Bank, Swedbank, European Bank of Reconstruction and Development, and Nordic Investment Bank. This is the largest debt financing transaction ever concluded by us, marking an important milestone. We also submitted a bid for the 700 MW Lithuanian offshore wind project with the state support. However, as the tender required at least 2 participants and only 1 bid was submitted, the tender did not take place. Additionally, we took over full control of Kruonis North offshore wind project in Lithuania after acquiring 49% stake from Ocean Winds. We continue developing the project independently to obtain a construction permit in 2027. Finally, our Kelmė and Kruonis battery storage and battery energy storage system projects were awarded state aid of 12.6 million euros. In the networks business segment, we achieved our goal of installing over 1.2 million smart meters by 2026. Also, the regulator has adopted the resolution setting RAB at 1.9 billion euros, weighted average cost of capital at 5.774%, and additional tariff component at 51.8 million euros for 2026. In the reserve capacities business segment, a capital overhaul of Unit 7 and Elektrėnai complex was commenced, with the completion scheduled by mid-2026. And in our customers and solutions business segment, in the last quarter, we added 178 of new EV charging points, bringing the total to 1,558 across the Baltics. Also, we submitted comments to the public consultation initiated by the Lithuanian Ministry of Energy regarding prosumer model update. This change is aimed to improve loss-making prosumer supply activities, with implementation targeted from 1st of April 2026. However, the timeline is subject to European Commission approval. Now, I would like to highlight the key developments in our sustainability performance. During the reporting period, our net electricity generated increased by 60.9% to 3 terawatt-hours. We increased generation from green capacities assets driven by new assets launched: Kelmė wind farm, the second Silesia wind farm, and Vilnius CHP biomass unit. However, our green share of generation decreased by 17.6 percentage points to 66.0% due to the proportionally higher electricity generation at Elektrėnai complex. Looking at our greenhouse gas emissions, it amounted to 3.48 million tons of carbon dioxide equivalent, representing a 22.5% year-over-year increase. This increase was primarily driven by a 92.1% increase in Scope 1 emissions, largely due to the new services provided by Elektrėnai complex. Scope 2 emissions stayed at relatively similar level, with 0.9% decrease, and Scope 3 emissions increased by 14.4%, reflecting higher electricity sales, especially in Poland. Finally, on our safety, we recorded no fatal accidents. Our total recordable injury rate stands at 0.97 for employees and 0.71 for contractors. With the strategic performance overview concluded, I will now hand over to Jonas for the financial results.
Thank you, Darius. Let me start with the financial highlights of the first 9 months of 2025. Adjusted EBITDA grew by 2% year-over-year and reached 405.1 million euros, driven by strong results in green capacities and networks. Adjusted net profit decreased by 17% and amounted to 177.6 million euros, mainly due to higher depreciation and amortization expenses, as well as lower financial activity results. Our investments amounted to 529.9 million euros, with 51% allocated to the networks and 41% directed to green capacities. However, as 6 projects reached COD, total investments decreased compared to the first 9 months of 2024. Return on capital employed decreased by 2.2 percentage points to 8.1%, mainly due to the lower result of customers and solutions segment. Despite 11% increase in our net debt, our leverage metrics remain strong, with FFO to net debt ratio at 23.4% and net debt to adjusted EBITDA at 3.3 times. Our robust balance sheet was also reaffirmed by S&P with BBB+ credit rating and a stable outlook. Finally, in line with our dividend policy, we distributed a dividend of 68.3 € per share for the first half of 2025 in October, marking a 3% increase compared to the previous year, in line with the dividend policy. We will now take a closer look at each of our key performance indicators, starting with adjusted EBITDA. Firstly, Green Capacities EBITDA grew by 19% to 215.4 million euros, driven by new assets launched and new services provided. Secondly, Networks EBITDA grew by 16% and reached 192.8 million euros, mainly due to higher RAB as a result of continued investments into our electricity network and a higher WACC set by the regulator. Thirdly, Reserve Capacities EBITDA decreased by 5% to 34.7 million euros, mainly due to lower captured gross profit margin. Finally, our Customers and Solutions EBITDA was negative 43 million euros. The year-over-year decrease was driven by lower natural gas B2B supply results and adverse effect of prosumers under the current net metering scheme. Next, let's take a look at the EBITDA results of each segment in more detail. Beginning with Green Capacities, it remains the largest contributor to the group's adjusted EBITDA, contributing for 53% of the total. The main drivers behind 19% year-over-year increase were, firstly, the launch of new assets, including Silesia 2 wind farm in Poland, Kelmė wind farm in Lithuania, Stelpe and Varme solar farms in Latvia. And secondly, stronger performance from flexible assets and newly introduced balancing capacity services. Turning to the Networks segment, the growth in Networks adjusted EBITDA was supported by a higher regulated asset base, which grew by 13% from 1.6 to 1.8 billion euros, driven by continued investments into electricity network and an increase in WACC set by the regulator, which increased from 5.1% in 2024 to 5.8% in 2025. For 2026, the regulator has already set RAB at 1.9 billion euros, representing a 6% increase, and WACC at 5.74%, which is at a similar level as in 2025. Moving on to Reserve Capacity segment, EBITDA of the segment decreased by 5% year-over-year, driven by regulatory activities. And finally, Customers and Solutions adjusted EBITDA amounted to negative 43 million. Both electricity and natural gas supply results have declined year-over-year. On electricity side, the decrease was mainly due to prosumers under the current net metering scheme and negative effect from increased imbalance prices. And on the natural gas side, B2B supply result was lower, mainly because of more favorable margins secured in 2024. After reviewing the key factors behind our business segment EBITDA, let's move on to discuss our investments activities. In the first 9 months of 2025, our investments amounted to 529.9 million euros. 51% of investments were made in the Networks and 41% in the Green Capacity segment. Year-over-year, investments declined by 9%, driven by lower investments in Green Capacities as 6 projects reached COD. Green Capacities investments decreased by 35% to 219 million euros. In the first 9 months of 2025, our main investments took place in solar, onshore wind, and hydro pump storage projects. In the Network segment, we invested 271.6 million euros, which is 25% more than last year. The growth was primarily driven by higher investments in electricity grid expansion through new connection points and upgrades, as well as higher costs to connect new customers as they are located more remotely. Next, our free cash flow. It stood at negative 122.6 million euros, relatively flat year-over-year. Turning to the leverage metrics, our net debt increased by 11% and amounted to 1.8 billion euros at the end of Q3 of 2025. Our key rating metric, FFO to net debt, decreased to 23.4%, but remains above the threshold required to maintain a BBB+ credit rating. And net debt to adjusted EBITDA rose slightly from 3.1 to 3.3 times. Finally, our guidance for 2025. Following our performance in the first 9 months of the year, we narrow our full year 2025 adjusted EBITDA guidance to between 510 to 540 million euros and update our investment guidance to between 700 and 800 million euros. There have been no changes in the directional guidance for adjusted EBITDA by segment, nor in the main drivers behind it. With that, I will hand over to Darius to summarize our presentation.
Thank you, Jonas. To sum up, over the first 9 months of 2025, we delivered strong financial and operational results with key highlights as follows. First, our adjusted EBITDA reached 405.1 million euros, representing a 2% year-over-year increase. Second, our installed capacity increased by 0.7 gigawatts to 2.1 gigawatt, reflecting our focus on driving strategic growth. Third, we maintained a robust balance sheet with the net debt to adjusted EBITDA ratio standing at 3.33 times. Our strong financial position also confirmed by S&P Global Ratings, which reaffirmed our BBB+ credit rating with a stable outlook. Lastly, in line with our dividend policy, for the first half of this year, we paid a dividend of 68.3 per share, corresponding to 49.4 million euros. And lastly, for 2025, we expect adjusted EBITDA to be in the range of 510 and 540 million euros and investments in the range of 700 and 800 million euros. With that, I would like to thank you for your attention and joining us today.
We will now begin the Q&A session. To submit a question through the webcast, please click the Ask a Question button on the right-hand side of the screen. If you have dialed in and would like to ask a question, please press star 5 on your phone. Our first question is, how do you see the public debate surrounding the Curonian Nord project's development?
Given that Curonian Nord is the first offshore wind project being developed in Lithuania, we appreciate the interest in it. Group's supervisory board, in addition to its regular oversight activities, conducted an additional assessment of Curonian Nord development. For that purpose, they engaged independent experts from Wood Mackenzie to assess the project's timeline, investment assumptions, and risk management practices against global and European offshore wind industry benchmarks. The assessment concluded that the multiple implementation scenarios adopted by the project team represent a robust approach aligned with the industry standards, that the investments made to date are reasonable and below benchmark levels, and that the group has a strong risk governance framework consistent with the market practices.
The next question is, why investments guidance for 2025 was lowered?
Yes. So we have decreased the top range of our guidance from 900 million to 800 million euros. And that essentially reflects our approach in being more selective on the green capacities investment side. So we are simply being more selective and doing only the best projects that we have in our portfolio.
Thank you. As there are no further questions, we will wait for a minute. As there are no further questions, this concludes our earnings call. Thank you for joining us today. If you have any further questions, please reach out to our investor relations team. Thank you and stay safe.